This video is going to show the difference between a single-step income statement and a multi-step income statement. So what is on the screen right now is a single-step income statement. It is what we are used to seeing. It has revenue, which in this situation we have sales and rent revenue. And then it lists out the expenses, calculates a total revenue and a total expense, and it calculates net income, your revenue minus your expenses. When we start looking at a merchandising company, which is a company that sells merchandise rather than a company that provides a service, we often do a multi-step income statement instead. Before we get into it, let's talk about the differences between a merchandising company and a service company. So in our revenues, instead of calling it fees earned, we are calling it sales, because now we are actually selling merchandise. So sales is a revenue account. And then our biggest expense for a merchandise company is usually cost of merchandise sold. And that is exactly what it says. It is the cost of merchandise sold. The multi-step income statement will list out your sales, and underneath it, it's going to your cost of merchandise sold and subtract it so we can get to the gross profit. So sales minus cost of goods sold will give us gross profit. That is essentially how much we've marked up our goods. We need that high enough to be able to cover all of the other expenses. And so when we look at our other expenses, we're going to break them down into operating expenses, which are your selling, admin expenses, and then other income and expenses. So let's talk about how we can tell if it's a selling, administrative, or an other expense. Now, if you were the CEO or CFO of a company, you would know your expenses because they would be your own company expenses. You might think, hey, I use this to help sell my product, or I use this particular expense in my actual office. But since we're actually working problems from the homework or the textbook, we actually have to have more information. So your problem is going to give you hints as to how to classify the expense. So I want to go over some of these hints that will help you be able to categorize it as either a selling, administrative, or other expense. So if it's a selling expense, this is really everything that happens inside the store. So if you think about a wireless carrier, they would have a corporate office, and inside that corporate office, all the administrative costs happen. And then they would have stores, and that's where a normal customer could go in and buy a phone or sign up for a service. That's a store. Those costs that happen inside the store are going to be your selling costs. Any expenses that have the word sale or have the word store are going to be selling expenses. Other selling expenses would be advertising and delivery expenses. Advertising, because this is how we get the word out to make the sale. And delivery expense, because this is what we're offering to our customer in order to make the sale. Now let's look at administrative expenses. These are items that happen inside the corporate office. The hints that your textbook would give you, it would say office, so that we know that it happened inside the corporate office. Other items that could go here, for example, are the CFO, because the CFO would actually work in the corporate office. Alright, so then we're going to add up our total selling expenses and add up our total administrative expenses and then total those two numbers. And that total will represent total operating expenses. And then we take gross profit minus total operating expenses, and that will give us income from operations. So again, it's your revenues minus your expenses. That will give us income from operations. Below that, you will put other income and expenses that are not directly related to your normal business operations. of buying and selling this merchandise. So for us, rent revenue, so we may have an extra office that we rent out, then interest expense, so we may have borrowed some money and we're paying interest on that. So that goes under other income and expense. So we take our income from operations and we net it, plus 600 minus 2440, and we get 75,400. So this is a multiple step income statement. It breaks out and has subtotals. So it breaks out gross profit, which is sales minus cost of goods sold. Then it categorizes our expenses into selling and administrative. Then we have a subtotal and income from operations. Then we bring in our other stuff and we get net income. So let's look up here and make sure that we answered all the common questions that students usually have. We have, what is sales? Sales is our revenue account. What is cost of merchandise sold? This is an expense account. What is gross profit? It is sales minus cost of merchandise sold. How do I know if my expenses are selling or administrative? Well, selling expense are going to be things that happen inside the store or things that help you sell to a customer. And administrative are things that happen inside a corporate office. And then finally, what would the statement look like if it was a single step income statement? It would look like this. It would still have the same bottom line net income. It would just not be broken down into those subtotals. And now we have gone over the parts of a multi-step income statement. As always, if you have any questions, feel free to message me.